This video is for educational purposes only. We are not financial advisors. Past performance is not necessarily indicative of future results. Please note that we do not offer technical support. While we routinely maintain our website, videos, and member tools to ensure proper functionality, any issues related to third-party platforms or software, including interactive brokers, YouTube, Microsoft Excel, Adobe PDF, and others, should be directed to the respective service providers. Close a sell call spread position on the interactive brokers trading platform. Before starting this video, you should already be familiar with the structure of our trading instructions, the interactive brokers option trader interface, how to enter the underlying asset symbol, and select the option's expiration date and strike price. You should also already be familiar with the characteristics and order placement processes of the various option strategies introduced in the videos shown on the screen, as well as how to configure the Mosaic platform and the option trader platform of interactive brokers. Let's get started. To make it easier for members to follow and practice, we use the exact same format as interactive brokers when specifying a particular position to close. If you receive the trade instructions shown in the image, you'll need to close a sell call spread, referred to as a bear call by interactive brokers, on XSP with a strike range of 580 to 583, expiring on June 6, 2025. The year is typically omitted by interactive brokers. Let's review. When opening a sell call spread position, you receive a credit. So when closing the position, you'll need to pay a debit. If the amount you pay to close is less than the credit you originally received, you make a profit, otherwise, you incur a loss. As indicated by the asterisk in the image, the maximum cash per unit you can pay when closing this position is $3, which is the difference between the two strike prices. Now let's begin the actual operation. Go to the Mosaic platform of interactive brokers and locate the position labeled XSP June 6 580/583 bear call. The yellow dashed box on the screen highlights the exact position we're instructed to close. You'll notice a plus sign on the far left. Clicking the plus sign expands the spread, revealing the individual option legs that make up the position. The symbol then changes to a minus sign, indicating that you can collapse the spread again. As we can see, this option spread is the same trade we demonstrated in the video, How to Sell Call Spread in IBTWS. Specifically, we sold the XSP June 6 580 call, indicated by the red background and -2 in Mosaic, meaning we sold 2 contracts, and at the same time, bought the XSP June 6 583 call, indicated by the green background and 2, meaning we bought 2 contracts. We received $12.357 per unit for the former and paid $10.508 per unit for the latter. So for the entire spread, we received a net credit of $1.85 per unit. What can be confusing here is that although we sold a call spread and received cash, Mosaic displays the position size with a green background and a positive value of 2. However, we also see that the AVGPX, average price, for the position is -1.85, which matches the actual credit of $1.85 per unit we received. So a reasonable interpretation is, if the total trade amount, in this case, quantity 2 times price -1.85, is negative, it indicates that cash was received when opening the position. Conversely, if the total amount is positive, it means cash was paid to enter the position. For an option spread, we always try to close the entire position as a whole first. Click on the spread, and it will automatically appear in the upper left Order Entry panel. Double-check to confirm it is the position we want to close. Next, select Sell to close this position. This is another point that can be confusing. We already sold the call spread when opening the position and received a credit, so how can we sell it again to close? Here's how it works in Mosaic. If a position is shown with a positive quantity in a green background, you need to select Sell to close it. If it's shown with a negative quantity in a red background, you select Buy to close it. This is different from the usual understanding where sell means selling and receiving cash, and buy means buying and paying cash. At Giga Certainty, we follow the general and common sense definitions in all our materials, videos, and communications with members. Just be sure to remember this specific convention used by interactive brokers when closing positions. Next, confirm the quantity to be closed. Now, let's look at how to set our closing price. This can be done in the area highlighted by the yellow dashed box on the screen. As a reminder, when we opened this position, we received cash. So when we close it, we'll need to pay cash. In this case, we're using the sell command to close 2 contracts, which means the order will show a negative quantity, -2. Because of that, our price per unit must also be negative, so that when multiplied together, the total amount is positive, indicating a cash outflow. Again, this can be confusing and unintuitive for new users. As you can see, Mosaic follows this convention by default. In the yellow dashed box, the top half shows the current market bid-ask range, which is -2.64 to -1.90. This means our limit price should fall within that range. The bottom half shows LMT -2.64, which is the place we're going to enter our price. LMT stands for limit order, meaning we'll only accept a fill at our stated price or better. Mosaic's default price is -2.64, but clearly this is not ideal. Remember, we are closing the position by paying cash, and although the bid must be entered as a negative value, the smaller its absolute value, the better. That's because when multiplied by the trade size, -2 contracts, a smaller absolute value results in a lower total cash outlay. We can start by choosing a price with an absolute value slightly lower than -1.90, for example, -1.85, and then gradually move toward the other end of the range, currently -2.64, if necessary. This range will keep changing with the market, but remember, the position closing instruction specifies that we can spend no more than $3 per unit. So the worst price we're allowed to offer is -3.00. Sometimes, a closing order for an option spread may remain unfilled. This is usually because the spread has poor liquidity, and the bid-ask gap between counterparties is too wide, making it difficult for a match to occur. In such cases, we need to cancel the order. Then, we will close each leg of the spread individually. We expand the option spread so that each leg is displayed individually. Always make sure to close the sold leg first. In this example, the XSP June 06 foot 25,580 call. Click on this option to begin. This option shows a quantity of -2 with a red background, so we should select Buy in the upper left Order Entry section to close the position. Set the quantity to 2, which matches the size of our current position. Since this closing trade has a positive quantity of 2, buying 2 contracts, the price should also be positive, so that the total trade value is positive, indicating that we'll pay cash. Mosaic shows a market reference range of 12.41 to 12.81. We'll start by bidding at the lowest price, 12.41. The order has been created but hasn't been filled yet. The other leg of the spread is a bought call option, XSP June 06 foot 25,583 call, that we now need to sell to close it. We'll use a similar process to create the order for this leg. Now, both unfilled orders appear under the Orders tab in the Activity section. However, there's an error. The option we intended to sell was set to 1 contract, but it should have been 2 contracts. Next, we'll gradually lower the asking price for the option we're trying to sell, while raising the bid price for the option we're trying to buy, adjusting each side slowly until both orders are filled. But always remember, the difference between these 2 prices must not exceed 3.00, meaning the net cash outflow per unit can be no more than $3.